Do you have your computer up? I'm curious on what options you do have on your reconciliation if you don't have the undo option. And I can see what options you have and what options you don't have.
I have it open in a different computer. I can sign in really quick.
Okay.
Actually, I have it open on another computer. Just that the other one doesn't have camera, so I couldn't sign in on that one. But I can show you. Okay, I think I'm in. Yep, so do you want me to share?
Yes, if you could. Yeah. Oh, I think I have to allow you to share. Oh, okay, try to share now. Share your screen.
Okay, can you see it now?
Yes, I can.
Okay, so if I go to reconcile,
yeah, so it shows that history by account.
But it doesn't, I don't know, it doesn't give me the option to undo. Because it's here, right? Where I can.
Yeah, where it says view report, that drop down only shows you a print option. Is that correct?
Yeah, just print. That's all.
Interesting.
Yeah, and here are this is the check I was talking about that I couldn't find it. It was reconciled somehow in February. I don't know how I did that. I'm not sure how that happened. But it was supposed to be reconciled on April, sorry. But yeah, it doesn't give me any options.
Yeah, that's interesting. So it looks like we don't have the same access. It shows that you're the primary admin and I'm an accounting firm. So I have an accountant's access, which is different than what you have. So I can undo the reconciliation.
Okay.
Which I guess you can't, which is disappointing.
Yeah,
me.
to fix that, but yeah, it doesn't give me the option.
Yeah, so I just undid that reconciliation. And then
The
to
last one.
re-reconcile. Yeah, from there you can go in and re-reconcile. April's, and it should be on, and it will clear that 380 as well.
On the April one.
Yeah, well, the February one or the March one, but for April, you should be able to reconcile without any account discrepancies, I believe.
Okay. So I have to redo April, and that's it.
Yeah, just April's reconciliation.
Okay. I'll do
That
that.
should fix your accounts. And I think, yeah, like I said, I think everything else matched from what the assignment shows.
Okay.
Yeah. Okay.
Thank you.
You're welcome. I'm trying to think if there's anything else related to that. What I did, because there was some account discrepancies that came up by changing things, it cleared up some of your discrepancies of how they popped up or came up. Yeah. Other questions? Let's start off. Do you guys have any questions or concerns that I can help with?
I do have a question on the page 227. It says to add, not to add, but to prepare the purchase building. And it says put it on, like add it on to the building account, but it doesn't, I don't have the building account on my account list. So should I just add it?
Yes.
Okay.
If you don't have the building account on your account list, yeah, you can just add it.
And then it goes to like as an asset, like the track account.
Yes. Yeah. So the building, it's going to be an asset. And there's going to be, I'm trying to think exactly what it's going to look like. Let me see here. For May. Building. Is it titled building or warehouse? I can't remember.
I think it's building. Let me check.
New building is purchased in May. It is purchased with cash and a mortgage.
Mm-hmm.
Mortgage is a type of loan. Mortgages are secured loans with the underlying property set as the collateral till the borrower pays the total loan amount. Attached is a bill for the attorney reviewing of our real estate purchase contract. New building, please charge to building account. Okay. Right. So it says for the purchase of a new building using cash and a mortgage to fund the purchase. The total purchase for land and building is 1.9 million, 1.95 million. We need to pay 100,000 in cash to the seller. And CRX Commercial Real Estate. Oh, the seller is CXR Commercial Real Estate. The mortgage for the balance is 20 years. Yeah, So you just have to create the that account if it's not already in the chart of accounts.
Okay.
So there's a few things at work here, right? We have to credit cash. We have to debit an asset for the whole 1.95. We have to credit the remaining portion of the mortgage as a mortgage or a loan. And we have to separate, well, I misspoke. So there's going to be 4 accounts. One is going to be the land, one is going to be the building, one's going to be the cash, and the other is going to be the loan. And that's just one entry.
And that's under a journal entry?
Yes, you can either do it as a journal entry, or you could separate the cash as like a cash receipt, and then do the other portion as a journal entry. But you have to do 350,000 to land, and then you have to do the remaining portion to the building. And those are the 2 asset accounts. You'll have land and a building, and they need to be separate asset accounts. And then you'll have the 100,000 coming out of cash, and then you'll have the rest of it coming out of a mortgage.
So,
and I don't think they have a mortgage account either, right? A liability mortgage account.
no, I don't think so.
Yeah. So at the end,
I think most of those accounts, I think at least on my one, was inactivated in the beginning. So I just have to search for them and activate them again.
Okay.
Because I think in January, because we are not using, we kind of deactivate all the accounts we are not using. And then I just activated them back again.
Okay. And that makes sense. Because in the instructions as of January said deactivate or inactivate any accounts you're not using. And well, that makes sense. But it's not a big deal if you just create a new account for it. It's just data in your books. But essentially, we're going to need this mortgage account, and it's going to have the 1.8 million on it because we paid 100 grand of cash. And then we're going to end up with a building with the 1.6 or 1. What did it say? Oh, the 1.65 and land of 350,000. So it's 1.6. So let's do the math real quick. It said 1.95 mil. So 1,950,000 minus 350,000 equals 1.6 million. But it also says something about attorney fees.
Yeah, those attorney fees, I wasn't sure. So those
What are
I
the
add
attorney fees? Oh, yeah.
the question. So that check, do I make it to, so it credits cash and debits what account?
The asset. So please charge to building account.
Okay.
This $5,000. What other fees do we have in there? Because it shows as building 1.621. Do we have any other buildings on our books so far? Trying to remember. Or are there other fees that we have to real estate fees or other closing costs that we have to pay?
No, I think for that building, we only have the lawyer payment.
Yes,
fee.
there's an office, I think it's office. Oh, let me check the name again, but I think we bought some office furniture for the amount, and it goes to the building as well.
In this doc?
Yeah, I'm just trying to, it's
Oh, here we go.
office,
Yeah.
yeah.
So we also have 21,425 new office for premium office products. They gave us terms of net 30. Total amount was 21,000. Please set up an AP for this one. So it doesn't explicitly say to add it to the building asset, but to match the balance sheet, well, there's 21,000 here in the balance sheet too, right? To this furniture and fixture.
Okay.
Where are we getting the other 21,000?
It's
My
on the
question.
table.
Attorney fees. 100,000. That's, oh, interior design. There it is. So it's both the 5,000 of attorney fees and 16,000 of attorney fee or interior design equals the additional 21,000 that's in that building account. And then we have 21,000 of furniture and fixtures that need to go to this furniture equipment. So all those individual pieces that we show here, like this, needs to go to the building account, and you can do a check for that or a receipt for that, expense or a check or a bill or expense or a check for this payment memo. And then here, interior design, do an expense or a check to the building account as well. So that gets us to the 1.621 amount. Let's see. What else do we have? But the initial entry for the everything, this loan, that loan is going to be a journal entry. So for 1.85 of the loan, this is going to be a journal entry. Everything else we can create bills and then expenses for, cut checks for if we want, or just create an expense for it. And that will get us to the 1.621, 25,000 here, and then the land of 350,000. Does that make sense, or would you want me to kind of walk through it on the call and kind of show step by step of how it should be done, or is that making sense?
Yeah, if you can do a step by step, I'm a little lost in there. Sorry.
Okay, no, that's fair. So I think I have
My
yours.
one is done, you can check and.
Okay, let's see. So let's check if it was done correctly with yours, Vanessa, and then I think I'll walk through it on Magna's books as well to give an example of how it's done. Oh, it's in May. All this activity is in May. Yeah, okay. So I will share screen. So these are Vanessa's books. We have the loan here, mortgage 1.850. We drill down into it. It shows that there's $1 million paid off the loan. So that's a little wonky. We shouldn't be paying it. We have the payee bank account. It shouldn't be going off the mortgage, but rather it should go to the asset. So we have the building and land. So we have these backwards, it looks like. So let's change this real quick. We have the journal entry. This should be land. And then we have this as the building. We have the mortgage. Well, reality, we should probably only put 1.8 here. Oh, sorry, not that. 1.6 there, or 1.5. And then here we should put 1.8. Oh, what am I doing? Save and close. So now I have building and land, but then cash. We should have a cash transaction of 100,000. Instead of it going to mortgage, this should go to buildings. And like it came out right on your reports, and I guess that's semantics, because really, are you paying 100,000 to the bank, or are you paying 100,000 to the mortgage provider? And essentially it's the exact same thing. But with what the doc said, it was 100,000 was paid, and that goes to the building, and then mortgage for 1.8, so that's accurate. Buildings of 1.621635, I think that's accurate. Yeah, and then 350,000. So Vanessa, that looks correct. And then I will jump into Magnus, and we can kind of do step by step as we read through. Let me see, make sure I'm in the right account still. Nope, I am not in the right account. I need to jump into Magnus. Okay. So I'll open up this, and I'll share my screen. And remember, if my screen locks up, let me know, because it happens all the time. So I'm going to share my screen, desktop number 2. We have signed papers for the purchase of a new building using cash and a mortgage to fund the purchase. The total purchase for land and building is 1.95. We need to pay 100,000 in cash to the seller. CXR Commercial Real Estate. The mortgage for the balance is a 20-year, 6.5% loan with Hillside Commercial Funding. The land is valued at 350,000. The mortgage payments are due on the first of each month, beginning June 1. So we don't have to worry about that until next month. Create any necessary new accounts and prepare checks for the down payment. So let's see here. First, we need, like Vanessa said, we'll go to this chart of accounts. We'll look at include inactive accounts, and we'll look at mortgage. We have mortgages, long-term mortgage. We can make that active. Let's see, mortgage interest. It's an expense. Interest paid. We'll make that active. I already did. So I made that one active. Let's refresh. And we'll make this active as well. What is the parent? Is this the parent to that? What is above it? Please make the parent account active first. Then you can, I don't know how to see what the parent account is. Mortgage, long-term liability, we just activated that one. We have expenses, wages, that's deleted. Interest paid, we have all these sub, which I don't know if you guys even need that. What does it show for the P&L down here? And now I'm probably getting into semantics, and honestly, I'm not going to look at it that detailed, and it's not going to show me even on this because we're not going to need it till next period. Let's look at June's. But if anyone else runs into this, you'll have an answer for it, I guess. So let's look at our P&L, and it's nice that we have a little cheat sheet here to tell us exactly what it looks like. So this just shows interest expense. So we don't need mortgage interest expense, but we will need interest expense, which I'm guessing you already have set up right there. Okay. So we activated the mortgage interest or the mortgage account, but it doesn't have view register edit. It doesn't have an account number, which in May it does have an account number. So in May it says 1300 or mortgage 2610. So we'll create that 2610. Save. What else are we going to need? We have a mortgage, we have furniture, equipment, we need building and land. Do we have those assets on our fixed assets? We have our warehouse, we don't have buildings and land. We have them here, so let's make these active. Building and land. And let us add numbers to them as well. Fixed asset building, 1300. And land. And again, like, I'm not sure. I personally, I don't really grade if it has a number by, if it's not, if it's typo, you know, I'm looking more at the total assets, if they balance, if they match this number. if these individual assets balance and look if they match, then we're good to go. But now that we've created those accounts, we have building, we have land, we already have furniture, equipment, and then we have our mortgage there. So that's what we need. Now we have building, what we're gonna need for this. And now we have everything we need. So sign papers for the purchase of a new building using cash. So we can see one expense. The payee can be the CXR commercial real estate coming out of the Canyonlands. And this is, we're paying for the building. And we can say down payment for 100 grand. What's the date? May 15th.
I think
Remember,
I already
always the
made that
date.
check, actually.
You already made this one?
I think so. It's check number 2380.
All right, let's
Maybe
see.
you
Let's
can
go back.
check if it's correct. I wasn't sure what accounts to use, but
Well, let's go to there's 31 days in there. So now there's already two of these purchases. So this is the one I just created. This is the one that you did. Stupid. There we go. Purchases. So this category, that's gonna screw up your P&L, and it's gonna hit your P&L and make your P&L look wonky.
okay.
But rather we need to put it to buildings.
Okay. Yeah, I
That's
wasn't
at
sure what I
515.
use in that one.
Yeah, that makes sense. So now we got to get rid of my entry that I just made. And that is this one. Yeah, this is the one I made, so we can delete that one. Okay, so we've already done the first one. We've done the $100,000 cash to seller, the CXR commercial real estate. The mortgage for the balance is a 20-year, 6.5% loan with Hillside Commercial Funding. So now we can create a journal entry on that date for building of, I want to debit that for 1,850,000 building loan.
Do you want to check my
Close.
journal entries? I think I already did that one too. Sorry.
Oh.
I was trying to do it, but I got confused. That's why I had those questions.
Okay, so let's see.
Of journal entries, you can find the last one.
So I have a notes payable and purchases.
That's probably wrong.
Okay. Yeah. Yes. So the short answer is yes, but let's make it right.
Okay.
So we have the mortgage, 2610 mortgages,
Okay.
and it's for 1,850,000 building purchase. We have the building of well, we need the land to be 350. Yeah, so we have 1.5, we have 350. And then we've previously already taken care of the 100,000. So that puts us at 1.9. total on building, and we have a $1.85 million loan, which is what we want to see on our financials. So when we do that, it looks like this. We have the building for 1.6, and then we have 350,000 for the land. We have mortgages for 1.85 million. What's missing from our ending balance here is the 5,000 in attorney fees, which we can capitalize, as well as the interior design fee of 15 or 16,000 that we need to capitalize as well. And when you create those bills, where it says, yeah, interior design, you can create an expense, say Hunsaker, for 16,500, and put the expense as the category as buildings. And we're not expensing this right now, and this is, you know, a pure tax / GAAP ruling says you don't have to expense these things because you can capitalize it, which means you can capitalize, put it on your assets, and then you can start depreciating them using the depreciation schedules that are listed, that I put on the website. Amortization and depreciation schedules are included. Yes, course information and materials. But you won't be dealing with that until June, I believe. Pretty sure. Yes, because I don't see any depreciation accounts here. So you'll get to see that in June when you hit depreciation, accumulated depreciation and depreciation expense. Yeah. So you were almost there, Magda. It's just you were missing kind of that last piece. You knew you needed to do a journal entry, you knew you needed to do a check, but it needed to go to buildings and create a fixed asset on our books.
Okay.
All right, cool.
Yeah, thank you.
You're welcome. Are there other questions that we have here?
I do. I didn't understand what we are supposed to do with the packing slip.
Right, let's see here. I got a message about that as well through.
Because like there is one that says the order. So, you know, we do the order. Usually we do the order and then I do the bill. But then now there is the packing slip. So I'm like, I've just ignored it, or and then do the bill later, or do I do the bill when I see the packing slip?
So let's see here. The packing slip is May 4th on this Wasatch, and we're the customer. Your order is complete. Now on the same day, so Wildware distributors are giving us a packing slip for this. And it gives us our SKUs and quantities. And then it gives us our SKUs, quantities, and price, and we have the invoice. So you can use the packing slip through the system, but really the QuickBooks isn't made. I'm trying to think of my own opinion and what this course is teaching you. in my own opinion, like QuickBooks isn't made to use packing slips very well.
Okay.
Larger systems are, but I'm trying to think in QuickBooks what the point of it would be to use a packing slip and not just an invoice. In my mind, an invoice is what you go off of. That's what's going to show up on the financials. The packing slip is usually given to your warehouse and
Okay.
your team that manages everything to cross-reference what they have against what we got invoiced for. And if there's anything that doesn't match, that's when it would come up with issues, or we'd get credits, or go back to the vendors and work through stuff. But I can't remember if there's any situations that happens where it says your packing slip is different than the invoice.
Yeah, well, in June, it's not different, but it's has like 4 days difference between, they have the packing slip on June 8th, and then several large orders show up, and then June 12th is the invoice. So my question, if you don't acknowledge that you've received the materials, then can you actually fill an order before you get to acknowledge the invoice?
That is a good question. And that's in the products and services realm. Where I'm not even sure if you can receive something in, because again, QuickBooks isn't like an invoice management tool or inventory management tool. QuickBooks is your GL system, right? Some systems, there's like Fishbowl is a good one that syncs up with QuickBooks. And Fishbowl, all it does is manage your inventory. So in that case, if you receive a packing slip, you would put everything into your inventory. And then you could fulfill orders in real time, even though you didn't get your invoice on a later date. So with a packing slip, I guess you could, does it want you to fulfill orders and push your inventory into negative in June?
Well, I can't tell that it ran out of anything. I acknowledged the packing slip and then went forward. And then when I hit the bill, I went back into the bill and changed the date on the invoice on the bill. But I just thought, what in real life, what are you supposed to do?
Right. So you're saying you create a bill when you get the packing slip, and then when you create the invoice,
Or
you would change.
well, I had a bill that was dated June 8th, and then I got the invoice and I changed the bill to June 12th.
Yeah, which is, I guess, is one way to do it. And I don't see an issue with that, other than the fact that when you get the bill and you have product on hand, and then you change that bill date, it's gonna change your information and saying you don't have any products for those few dates. But for operations, it's perfect, because then you'll have the stuff, it'll show active, they can pull from it. But then for accounting purposes, it'll give you the due date and the invoice date, and you can update that. So yeah, I don't see an issue doing it either way. Just using the packing slip as the date, that date, and then changing the due date, like when you actually pay it, because it's going to change your APs, but they're all in the same month. It's going to change. It's not going to change any of your cash, because cash isn't affected until you pay it, and that's not going to be affected by when you put the packing slip or the invoice in. It's just when you actually pay it. It might affect the discount date, but if this reads anything like anything else, it'll show that the discount date will be there on here. So it'll give you the discount date as well, which won't screw up your information if you use the packing slip. So long story short, the only reason you're really using a packing slip is to manage inventory. For the financials, we're basically keeping the invoice, but like in June, if the packing slip comes early and we get it, we can put everything in June or on the date that we got the packing slip, then that's fine. And we can either use that date as the invoice date, or we can update it to when we get the invoice. I don't see any issue with doing that. So I don't know if that even answers your question. What do you do with a packing slip? You consider an invoice if you have all the information. But if you don't have all the information, you don't really need to worry about it on the financial side of things. It's more of an operation process document.
Okay. So my next question that I actually got confused is with the bills, because in April it says that because we had one bill that was paid late, we are supposed to enter the bills as it comes and then pay them on the date instead of just like we are doing before. So with this month, like when the bill showed up, I created the bill, but not to be paid on the same day, to be paid later on. But then it says run a report. How do I run a bills report?
Right.
I looked there and I couldn't find how to run the report.
So there's this pay bills.
Yeah,
Is that the report that it's talking about?
I don't
Yeah, you
know,
can come
because
in
like I
here.
use that to pay bills, but is that a report?
Yeah, this is basically giving you what you should pay when.
Oh, okay. So when it says run the report, it just mean that I have to go to pay bills.
Yeah, there's also, I think there might
I
be
found one on the
outstanding
reports.
payables report.
I found one on the reports as unpaid bills, I think. So I looked for the name
Yeah.
of the report in there, in the fine report name. And
Right here.
Yeah, that one, unpaid bill.
Yeah, there's this unpaid bills reports. This accounts payable aging detail is also a good one because it should show you what's more than, this is all aging because we haven't paid it. The date is a little wonky because we now are November 16th, but in our class we're, at the end of May. And it gives you, these two. And this one, I'm not sure if this is accurate. It looks like we just never paid that for some reason from your January books.
Yeah, I have that one open. I'm not sure why.
Yeah.
But it's a partial bill, like part of the bill. It's not like as if I didn't pay it completely. So I'm not sure
Yeah,
if
these ones look like they should match. And this is a bill payment check. There's a $1.80 left, and then there's a vendor credit of $1.80. So all those match up. Why are they not matching up here? Because you have the vendor credit, clear payment.
so that's probably what happened, that I made the credit because it says to have in mind the discount. So I must have done that process wrong on the discount of that bill.
Dang it.
I think there's a date that's off. It says 10/21.
Yeah.
Yeah. Let's save. For sure, yes. That bill, these are the same now. Why are they the same? Anyways, but yeah, it's just, you run that report, and that report is to create or pay bills. This is the report that it wants, and it's not part of anything you have to turn in, or the other reports that are outstanding, and it would bring up some concerns that we just saw, like this one hasn't been paid. But the same thing with pay bills, it would show you that it's still outstanding.
Okay. But then it says like, I accept the memo, please pay the bills. But then when it says that the date that it says it's past the date I was supposed to pay the bills, that means I have to put the late fee on it?
Let's see here.
I don't think I did, and my numbers came out okay.
Yeah, that's what I mean, because well, actually I paid, when I saw run the report, I paid the bill, so because it was on time. But then later on it says again, you know, please pay the gas bill, the electric bill and everything. But the data, it says that it's past the time, so I'm thinking I did it wrong, that I'm supposed to pay late.
I think it was just 1 day late on the memo.
But that one was from April, wasn't it? That it was, I think, was 320, and then we have to pay 10 extra for the late fee.
I'm trying to find it. Let's see. What, do you know what page that's on? Where it says please pay extra, or please, if it's late, please pay it. Because I'm
I
not
think
sure.
that, yeah, that's the pay late thing. It happened in April. That's what I mean. Because it happened in April, they told us to put the bills in as soon as it came, and then don't forget to pay on the right date. And that's when I get confused, because when it reminds us again, it's past the date. So that's why I'm thinking, is the exercise for us to pay with the late fee, or no, we just pay normally?
Well, if you pay it on time, then you have to pay it. If they're going to charge you for it, then you'll have to pay it, obviously. I don't know the details of the document to say if they're charging you for it or not.
Okay,
Does that make sense?
yeah.
So the transaction is in page 148, the one that talks about the late fee on April.
Page 148. Let's see here. Is that in April?
Yes, in April. It's to pay the power, $320,
Yeah.
included the late fee.
So for May, we don't have to, let me see, I'm not sure. If we've already paid it in April and we don't see it again in May, then we don't have to worry about it, is my thought.
Okay.
And if it's not causing any difference in numbers, then we don't have to worry about it. So unless they charge you the late fee, because there is a $10 late fee
Yeah.
for the missed payment, and then we enter all the bills and pay on time, then pay when due, then we don't have to worry about it. And that's pay on the due date, or I'll pay so they get it on the due date. And our assumption in our financials is we can pay on the day. Does that make sense?
Yes. I think that's all my questions though.
Okay. Okay. Well, I think that's all we'll have for now. I'm trying to think if there's anything that I need to bring up for this week, but I don't think there is. There's nothing that stands out to me or other questions that came up personally through my message or my inbox. So, okay. Well, we'll end there. And as always, let me know if you guys have any questions that come up later.
Thank you.
Thank you.
Thank you.
Thank you.